Hi, I recently did an hour-long presentation on oil prices and the various things that go into that. I want to really quickly give a summary of just the conclusions, just the highlights of that for people who have less time. So, in short, there's an oil shortage. It is not a pricing issue, it is an amount of oil issue based on wars happening in the world. The most significant is between the US and Iran. Israel is also party to this, and they're mostly a US ally, but have gone against them at various points in this war for the conflict to continue. There's also conflict between Russia and Ukraine. That's been going on for years and has caused oil crunches a little bit. But more recently, Ukrainian drones have been able to strike oil infrastructure in Russia. So that would be the refineries, pipelines, and ports that export it, to the point where Russia is now diverting oil that would have been exported or would have gone to civilian use towards its military. And lastly, the strait on the other side of the Arabian Peninsula, between the Red Sea and the Gulf of Aden, has been closed to Saudi traffic by the Houthi group. This is based on long standing conflict with Saudi Arabia that has recently come up again. And Saudi Arabia had already been diverting its exports away from the Strait of Hormuz by taking them through the Bab el Mandeb. So this is bad news for Gulf suppliers. Despite this, oil has been very volatile. It's been up and down, which you wouldn't expect during a supply crunch like this, particularly because every day since this conflict, our oil supplies have been dwindling. We've had to withdraw about 1.5 billion barrels already from strategic petroleum reserves and from previous supply. Ultimately, um, these are based on expectations that the war will end soon, and also that in the kind of long term after these conflicts resolve, that we'll have an abundance of oil supply and that oil demand is either stagnating or falling around the world. Countries like China have already said that their oil use has peaked and that every year from now it will decline. This is partially due to renewables, but also in large part due to coal and just other fuel sources. The main reason for this is sovereignty. It's not to do with environmental issues. It is just to do with wanting to control um, a country's own fuel. So oil prices are based on the current physicality to the market, right? How many barrels of oil exist, how many people want barrels of oil, and how badly. But they're also based on expectations about the future. And this is allowed basically by strategic petroleum reserves that hold oil, and specifically, they're meant for crises like this. However, our SPRs are running low, and also um, there will be a delay. Whenever the Strait of Hormuz reopens, that oil will not immediately enter the market. It'll take weeks for those ships to reach their destination, between 3 to 5 weeks. And it'll take years for the oil infrastructure to be repaired. It'll take months up to a year for shipping volume to resume based on insurance premiums. So, will SPRs run out? Yes, it may only be for a few weeks, but it could be much longer than that. It depends on how long it takes for these conflicts to resolve. As far as the conflicts themselves, all parties involved have factions that are vying for peace based on things like the unpopularity of the war within the US and the cost of maintaining the war. Whereas Israel, for example, desperately wants the war to continue and is provoking Iran and the US as much as possible to continue fighting. Within Iran, there's similar splits between its democratically elected parliament that is open to peace. It wants sanctions relief, it wants to avoid further bombings, and its military wing, which wants revenge. There's been a lot of market manipulation happening in this war where military strategy will um, defer to market calendars and avoid disrupting the stock market as much as possible. One of the side effects of this is that a lot of insider trading has happened through this war. To talk briefly about what oil futures are, they're basically a form of insurance. So if you're an oil producer or refiner, you want to protect yourself against the case where oil prices decline. And if you're an oil consumer, like an airline, you want to protect yourself against oil prices going up. So that volatility is really dangerous for companies on both sides of things. They'll offload the risk to speculators who seek to make money. And so effectively, these markets are zero sum and they're very volatile. But companies involved in oil will offload the risk to speculators for a cost, and those speculators expect to make money. What's actually happened in the Iran war has been that these professional speculators who deal with commodities like oil deeply have lost money to Trump administration insiders. And as a result, they've stopped participating. This has driven prices for oil down, which seems like a good thing, but it doesn't actually add oil supply. And ultimately, this is just draining our petroleum reserves faster. And once those reserves are gone, we'll be forced to trade all of the barrels that come in directly to the people who need them at pretty desperate prices. So when that happens, we'll be forced back to the physical reality and away from our expectations about the future, which have a lot to do with someone's personal beliefs about when they think the conflict will resolve and how. So ultimately, things remain closed. The SPRs are working as a buffer, but that buffer also allows for market manipulation. In the optimistic scenario where the strait were to open pretty quickly, the physical, quote, price of Brent crude oil would be around 98 per barrel. However, it's very likely to actually be lower than that because our future expectations, like I've said, tend to assume that oil will stagnate or fall over time. So this 98 is basically an upper estimate. I previously thought that this couldn't physically go below 75, but I was wrong. It did for about a week, and the strait wasn't even open. In the pessimistic scenario, where these conflicts continue, oil prices could spike much higher than I'm talking about here, but I've kind of capped my estimate at 150 per barrel. The reason for this is simple. Once oil gets above a certain price, bidders get desperate, and it stops being about the value of the oil and starts being about the value of the money as other economic cracks appear everywhere. So once it crosses this threshold, other problems start to happen. And if these conflicts continue, once the SPRs start to run out, I believe that things will reset to this expectation, which is very dangerous. Ultimately, my personal hopes are that are for peace and for as few people to die in these conflicts as possible. There have been massive human rights violations going on, primarily from the US, targeting infrastructure and schools and things like that. And then also, it's very interesting to see the urgency that countries have adopted now that energy has become a sovereignty problem instead of just a hypothetical environmental problem.